Welcome everybody to the SRSrocco Report Precious Metal Webinar. This is Steve Sanangelo of the SRSrocco Report, and I will be hosting the webinar along with precious metal expert Tom Cloud and Vic Patain. Now, Tom has got 40 years experience in the precious metal retail market, and Vic has 35 years experience in the financial industry. So, Tom, would you mind introducing yourself first, and then Vic, you can talk about yourself afterwards.
Steve, first of all, it's a pleasure to be on with you. I've respected your work for some time, and certainly am happy to be working with you and providing this kind of education. Mine's kind of simple. I got out of college and got right into financial planning industry in the early 70s. It was basically a brand new industry when I joined the International Association of Financial Planning in 1974. I think my membership number was 80-something to show you how early. But within 2 years, I was just hankering to be, I just became mesmerized by the metals market and watched metals move from $37, $8, $40 up to $77 very quickly. And so I really had no funds, nothing but a couple of young babies, and you know, the ability to sell anything that I really believed in. And that's how I started, and picking up the clients wasn't as hard as, you know, working things out with suppliers when you don't have much money to put up front. But so I got into it early on, and been very fortunate to spend 40 years and to see this. I've never been a telemarketer. I've always been one that's hands-on, want to talk to clients myself and be sure they don't get misinformation. When you sit where I do and see as many people that get hurt through these telemarketing firms that charge these huge commissions. And I was telling Steve earlier in the day that recently we had a financial advisor bring $1 million invoice to us from a big telemarketing firm that's on TV, and they put a guy 100% into rare coins in 2007, and the $1 million, the day he bought it, was worth about $610. It took 39% hit off the commission. And then over the last years, while gold has doubled from 600 something to 1350, those he would have had that. But anyway, he now wants to sell it, and he's only going to get about $410,000 for what he put $1 million into at a time that gold doubled. So anyway, that's how I got into it. I still have the same passion today, 40 years later, that I did then, and I feel like I'm here for a purpose to help people, and could easily be retired. I live in Venezuela, Georgia, where I would retire if I was retiring. This is where my second home has been for years. So I moved here 5 years ago and have no intention. And last thing to say, I've been fortunate enough to be on the board of Intercap back from 81 to 89. It was the 5th largest money management firm in the world at the time, managing over $5 billion. And then I was fortunate enough to be on the Say Hey Foundation with Willie Mays and a lot of professional athletes for about 8 or 9 years going back, and got a big following. And we'll talk a little bit later, Vic, as a quick introduction about how the financial advisors are coming back around in my world. A lot of them I've known for 20, 30, 35 years, and some of them I've just met recently. But that's primarily what we're doing now, is just being a broker at the lowest possible rate, still make a profit, and assure our clients that they got a quick chance to make a profit if the market's moving up.
All right, thank you, Tom. How about you, Vic?
Sure, Steve, and this is a real pleasure. So thanks for including me in this. It's a great honor. Really met Steve a little over 2 years ago. Reached out to Steve. We started a nice dialogue. Very similar thinking in a lot of ways. What attracted me to Steve and his work was how he was taking many different pieces of the financial industry and overlaying them and making it all make sense, including energy and the metals. I started in the municipal finance industry back in the 80s, and followed that career path for over 25 years. Eventually decided to move on from that, start my own investment advisory firm. And through our last crisis here in 07 and 08, just decided I needed to become much more focused on this space. So I've had the opportunity to meet some fascinating people. I've found them all to be very gracious and generous with their time when you approach them in a respectful way. So I would include Tom in that category, and certainly Steve, and certainly many others in the space. So there's a lot to learn, but it's not terribly complicated. And I think this has gone on long enough. Our current state of financial affairs, where I think folks have had the ability to seek out and kind of circle those people they trust and they believe worthy of reading. So I'd certainly include Steve and Tom in that group. So thanks for having me as part of this, guys. Appreciate it.
All right, thanks, Vic. Now, this is one of the reasons why I decided to sponsor Tom Cloud and his services on my site. I have been offered other arrangements before, but I decided not to do those arrangements, and there were different reasons for those. But the reason why I like Tom and his precious metal services is because he's one of the most upfront and honest precious metal dealers I know. And you see, after Tom started doing these precious metal updates on the site, he told me he had several dealers call him up, and they were very concerned about him sharing his low commissions because it's kind of like a hidden secret. And what Tom said was, what he told me was, well, you know, in the real estate market, when you sell a home, the brokerage commissions are open and honest. Everyone knows what they're getting paid. Why shouldn't it be any different with the precious metal dealer? So Tom is much different than many of the dealers out there. So Tom, could you comment on this and then give us a brief update, or give us an update of what's happening in the market today?
Well, there's two questions. Start out, I've been completely dedicated to low commissions from the beginning. And out there, you have, in our world, you have a spot price, you have a premium, the price that I would pay, say, the Royal Canadian Mint for a 1 ounce gold maple leaf, and then you have the commission, then you have the total, then you have the shipping, then you have the total price to the client. And what I wanted to do was work out where we could show the full commission, take care of make the commission big enough to where I could pick up the shipping expense and give the client a really good chance to go in. And we've kept that structure, Steve, all these years, is 2.5% on gold and 3% on silver over our cost, and that includes the shipping and insurance where the client takes delivery or has it sent to one of our storage options that we'll get to later today. But and it has worked, and then we don't charge anything on the back end. And there's several reasons for that. Coming up in the security business early in my career, there are things that can deem securities, and I've had a very conservative lawyer that's always said that it's borderline. If you're telling somebody to sell something, you're profiting from it, then it's supposed to be a security. And there are very few companies, if any, that I know that don't charge back-end fees. But we give, not only do we give the investor everything if they bought it from us, but we'll even make 2 or 3 wholesale calls to try to get them the most, because wholesale prices will vary on every product every day by a little bit, depending on how bad a wholesaler needs a product or how bad he doesn't need it, and will drop to a lower bid price. So the first part of that question is we think is important because, like you said, if you buy real estate, you know there's a 6% real estate fee. If you go in and take a mortgage out on your house, you know exactly how many points you're going to pay, you know what the closing costs are. But in our world, it's not like that because it's not regulated. And where it really hits you is when you sit here and see widows and people that barely have enough money. They're sitting there down 50%, being shoved into rare coins instead of gold bullion coins. So I take it very personal to try to educate and my staff. I don't have anybody working on commission on my staff. They all work on salary and bonus at the end of the year. So I think that's really important. I'll kind of shut up there and see if anybody's got anything, and then I'll jump right into what's going on currently in our industry.
All right, thanks, Tom. No, I appreciate you sharing that, and you had some very interesting things to talk about. So why don't you go ahead and start talking about some of those topics that we had discussed before? I think the attendees would find it very interesting.
Well, I think personally there's going to be three things the rest of this year that's going to be the key fundamental drivers in this market. Now, there's going to be a lot of fundamental drivers in our market going up or down. But the three that I'm keeping a close eye on, of course, is China getting their special drawing rights on October 1st with the IMF, and them having to release their gold holdings prior to that. It could be any time in the next 45 days. We had some rumors early this morning that there was a 30-ton deal in gold being priced in Europe. We still can't tell if it ever closed or not at this point. I'll probably know in the morning. But these things are important because once the special drawing rights are given and they've given their reserves of gold, then there's two questions we have to ask ourselves. Number one, is that the real number, or are they holding back to continue to accumulate? Will they just tell the IMF enough to get approved, or will they release their full number of tonnage of gold? And for the ones of you who don't know, the United States allegedly has 8,163 tons. And we've seen estimates. People think the Chinese will say anywhere between 3,500 tons and 13,500 tons. But I certainly don't have any insight into that. But it will be a big driver, especially in the supply side in the eastern part of the world, if that comes into a number that even brings into question, does the U.S. have the gold they say they do? Driver number two is what just happened in Japan in the last month, and that is a country marred in recession for 26 years, basically, with no economic growth at all, has finally turned the seats, and 77 of the 78 parliament seats went to what you would call the left wing, or people that want to print money. So they first call they make is to Ben Bernanke, and Bernanke is a consultant to them, and Prime Minister Abe, calling it Abenomics. And Abenomics is that they've got to build their military back because China poses a problem to them, but they pose no problem to China. So watch very closely what's going to happen, there with Japan. And then we've seen the Tanaka, the big, what we would call the retail arm selling the product, have a 60% jump in the first month. That clients are buying gold and silver, taking physical possession. And then on Monday, we saw the first perpetual bond in the history of the world, where Japan says people are fed up with negative interest rates. They don't want to give us 50 basis points to keep their money every year. So we'll put out a perpetual bond that has no maturity. We'll pay 22 basis points, which is nothing. And there's no liquidity on the market for these perpetual bonds that are coming out. Somebody's got to want to buy it for somebody else to sell it. And, of course, this could lead to big inflation if they start dropping the helicopter money like the U.S. government, the Federal Reserve did back in 2008 during the recession. So keep an eye on Abenomics, keep an eye on Japan, and we'll keep doing the updates on Steve's site every other week to keep you abreast. And then the third one is the Sharia law. There's approximately 7 billion people on the planet Earth, and 1,600,000,000 of them practice Sharia law. And for I don't know how many hundreds of years, people practicing that could not buy gold and silver and things for investment. They had to earn their money and then pay it. Couldn't take any risk if they were going to practice Sharia law. But the World Gold Council has come in, is working now with the accounting of the Islamic State to change that. And I literally talked to someone with some knowledge of the subject today, late this afternoon, and he thinks this is going to get approved sooner than later. But certainly, I can't tell you that for a fact. But there's three huge drivers of gold and silver potentially out there, and all this will culminate by the end of the year. Well, the Japanese thing will go on for several years to get the full throttle of it. But those are the three major drivers in the fundamental world that I'm watching and watching very closely.
Okay, well, thanks, Tom. Now, you had some interesting news information today. A couple of tidbits about Venezuela. Could you talk about that?
Yeah, I've got a client that's brother is a missionary to Venezuela. He was in Venezuela 6 years ago when they had eminent domain and ran all the big farmers, gave them a couple days to get everything out of their 17,000-acre farms. And one of the gentlemen happens to live here on the island where I live. It used to be a plantation owner down there, so I'm already familiar with the story a little bit. But this missionary that went there 6 years ago literally returned last night, and I was the first person he called to tell me that for 1 ounce of silver, you're able to go and take food off of somebody that's growing food for up to 6 months for 1 ounce of silver.
Wow.
That's how bad things are, and the fiat currency is just basically gone. The second thing he said is the tenant houses on these plantations and even in some of the inner cities that were 25 to 35,000 US dollars back when he was there 6 years ago. He could buy 15 houses for 1 ounce of gold each. For 15 ounces, he could have 15 houses down there right now if you wanted to buy them. But he says basically, if you don't have gold and silver, you don't have money. You have the play money, just like a lot of us have talked about for years. But what it does, it just gives you confirmation that this stuff is going on in the world. So I mean, this is huge news how close Venezuela is to us, and to see that kind of purchasing power with gold and silver. So that was something I was talking to Steve about earlier today.
Yeah, I found that really interesting. It just goes to show you how much gold and silver protects wealth. 6 months worth of food for 1 ounce of silver. I mean, I know things are really bad there, but what was about the interesting gold purchases that you heard today?
Well, we started out the morning when you saw the price jumping. There was rumor about this 30-ton purchase, and I called the main source I have in England, and he just said it was rumored. It had not happened, but it was being shopped. So, but the price jumped on the anticipation of it, but it held up all day. It's above 1350, and certainly we've broken a barrier here, both in gold and silver today. It's going to be interesting the next 2 days to see if it holds, if these stories don't come to fruition. But certainly, if somebody's out shopping for 30 and 40 tons of gold in particular, they may know something about what China's going to say, or maybe it's China themselves. We don't know, but I will keep that posted on next week when I do a piece for SRSrocco report. Do a video next week, so we'll keep an eye on that. But as of right now, I've not been able to confirm it.
Tom, if I could, something that I find curious, if there are these sort of data points out in the marketplace, obviously we've seen silver and gold perform much better than they have in quite some time. But I look at things like premiums and availability. It would just seem to me, Tom, at some point the market assuming we have one of those, it would seem that the market would begin to really discount some of this activity, and we'd begin to see some what I would call abrupt changes in the behavior of the metals, as opposed to them being they've certainly moved up, but it's done so in an orderly fashion. So I'm curious if you feel the market will begin to discount some of these events. It just seems like there are too many of them that could happen or are happening for the market to continue to ignore several of them taking place.
Yeah, I mean, I think what you're looking at, Big, all these things you said, but you still have the investor, that's called the buyer, that owns gold and silver, that didn't buy it for long term, but bought it as a speculator. And one thing I've always seen in 40 years of doing this is, right when you see people writing it's getting ready to go to the moon, or they give you a big number in gold or silver, whatever the number is. But what you got to remember is every time you get to a level, you're going to have the people tempted to come back in and short the market, and you're going to have others that are going to sell. They bought silver at 14 something back in January this year. We had a guy to sell today because he was up net 41% net to him this year, and he sold it because he said he's never made rather than holding it. So you do have these products coming on the market, and when the market's moving like it's moved, especially in June on silver when it went up 17%, you were getting a lot of these wholesalers were getting their bids hit, and they were piling up inventory and really didn't want to keep. And yet, on the other side, you were having some big orders being shopped, and it was continuing to drive the price up, and people were covering their shorts and that was adding to the price going up. So you had all these dynamics working, three different dynamics working in the month of June. And as I told you and Steve earlier today, we did 72% of our volume in June in silver. That's never happened in the history of my company, ever, not once.
Wow.
Have we ever done it? Now, that was in June. Now, July, it's going to be more like 55, 56% gold and around 45% silver, it looks like, from my count today. But that just shows you that you get into a period like that, and what the people out there listening, like I said, when you're looking at a wholesale market maker that's buying and selling, if he's got a big order, he's going to raise his bid prices because he needs to accumulate the material as quickly as he can to fill the order. If he's got a big inventory of 100-ounce silver bars and he doesn't want to buy any more, then he just posts at a price he will buy. So, you know, you get into that, but that is what keeps it going, and that's the reason we saw that 2000 to 2012 bull market develop. We just kept seeing, and then once the short, all the people like the J.P. Morgans and the Goldman Sachs and all the people flipped from being on the short side to the long side, you can see what happens when gold goes from 256 all the way up to 1880, and silver runs from $3.50 up to $47, or $9 on silver in '08, up to $47 3 years later. So you can see what happens when the brakes get off of the short side of these markets. So the question now becomes, which one of these fundamental things will tip, just like you said, tip the shorts to completely get out and then make a fortune on the physical silver that J.P. Morgan already has bought, knowing they were going to go long at some point. So now not only will they go long holding physical silver, they're now going to go out and buy contracts long and get a double whammy on it. So it is just, it's going in and out all the time. But the little guy, when he gets convinced, that's going to be what sets it off, or the Sharia law situation, or Japan, or a big number coming from China in the next 45 days as to how much gold they actually have.
Yeah. Now, Tom, you had mentioned this to me before, how things have changed now, especially in large precious metal purchases from like wholesalers. Could you tell the attendees here what has changed now? Before, you were able to one wholesaler could do a large order, but what has changed recently in the wholesale business of large order purchases?
Well, what's happened is, because we live in an electronic world today, nothing like the way I came up. I mean, it's amazing. So used to, you would have a wholesaler you trusted, you had a big deal, you would call him, he would have part of what you needed, but he had another friendly wholesaler that he worked with. They both could split the profit, and they'd come back and you'd make your order with one wholesaler. But what I saw, especially back in June when it came to light, is you had some wholesalers saying, I'd say, I've got this guy that wants to buy, had a guy shopping for $3 million worth of silver, 100-ounce silver bars, one of the three COMEX brands that we use, Johnson Matthey, Engelhard, or Royal Canadian Mint. And he was saying, I'll sell you $1 million at this premium, and I'll sell you another $1 million at a premium that was higher. And I kind of said, I knew that was coming, because if a market's moving like it was in June, 17%, if he sells to me, he can't go replace it. So he goes on and asks for a higher, rather than getting discount for the bigger the order is, you got to pay more for it. So then what happens, because everything moves so fast, if I lock in $1 million with him, then I've got to go bargain with another wholesaler and try to buy the $2 million. So what it turned into is just hard work, and this is things I've never seen except back in the fall of 2008, going into 2009, 10, where we were getting delays, and people didn't want to give you a premium. I mean, they give you a premium on small orders, but on big orders, they would want to see if it was going to take their inventory away and what they thought was going on in the technical world and whether the price was moving up or down. But Steve, that's going to be the rule from now on. That's not a flash in the dark. It's people that are working on big orders are going to have to either trust one guy to go out and do the best he can for them, put it together, or he's going to have to make 2 or 3 separate deals to get the quantity that his client's looking for.
So what you're saying is it's just harder now to get the larger orders.
It's just harder. It's harder. It's like the wholesalers aren't excited about it. It's like it presents a bigger problem for some of them to sell you all their inventory.
I see. So before they wanted to sell the inventory because a big order was more commission or more premium. Now they don't want to sell the big order because it's harder to access all the metals. Is that what you're saying?
Yeah, if they have it. I mean, I did a couple $100,000 silver order Monday. If you have it, I mean, it's not any big, there's no thing. I'm just on these ones where they're big and they're wanting to pay a certain price, and you're trying to peg it in. But the way to get the lowest price is not necessarily to call one person, but to do 3 different orders to get the client the best price you can, because the wholesalers will be asking you more for that second million than the first million. Now, it just depends on what they have in inventory. I mean, it's not a rule, but that's what I've run up against the last couple of months.
I see. No, that makes perfect sense. I'm glad you explained that to us. Now, before we get into some of the questions, one of the things you had mentioned was the big change in the financial advisors, that the big change now that you're seeing with the financial advisors who usually recommend stocks and bonds and those assets, but you're seeing a change now in that market. Could you explain how that is changing in your business, especially in your business?
Well, my business is like the biggest change driver there, because I have an excellent reputation because I came up in that industry, and even guys a lot younger than me, if they ask their brokerage firm, they have somebody that has to have physical, we're up top of the list of most broker dealers. But what's happened is the financial advisor, if that's your living, and you're supposed to give good advice to your client, you're supposed to look at all the investments available in the marketplace, and 2000, 2008, you see gold go from 250 up to 700 something, triple, and they don't recommend anything in gold in the portfolio. And then in 08, stock market goes down 38%. The gold market goes up 8%. In 2008, there's a 46% difference there. And even if they had 10% of their clients' money in gold, it would have cut down a lot of those losses. All the financial advisors today are scared they're on their last leg with their clients. Their client allowed them to screw up one time by not having metals in there, but if there is another big drop in the stock market, there are going to be a lot of financial advisors that are going to lose some of their bigger customers. Then it comes into the part about them calling, well, we'll put GLD and SLV, the ETF, in my client's portfolio. That way, I'm still going to make 1.5% on my management fee on what's in there, where if the client buys it physically and has it delivered to him or to a warehouse account, then I'm going to get nothing. And that's where I'm working the hardest, trying to explain to them, it's not about your 1.5% management fee. If you want to tell the client you're going to manage this, we can send you a statement of your client every quarter where you can work out with him to get your management fee. But you need to have your clients in gold and silver. And I can tell you without any hesitation, any qualifications, I've had more financial advisors I've worked with this year, than at any year going all the way back when I first started in the late 76, 7, 8. I mean, right now we are dealing and working with quite a few financial advisors that are doing, and some of them are saying we're just going to buy the physical and forget about making the management fee, and others are saying because they will sell it to their clients for like 1.25%, 1.5% over, depending on what it is, over our cost, and so their clients get a great deal. But so that's going to be one of the biggest drivers when the financial community sees a drop in stocks. It'll be one of the key things that will push them into metals. And as we'll talk about a little later, when you're going to pay 50 basis points to store for SLV and 40 basis points for GLD, and we're coming in and offering 20 and 30 basis points, depending on how they want it stored, and you've got segregated metal in your name in a COMEX bonded warehouse at the cheapest rates in the world.
And that's
so it's
private.
Pretty exciting times for us, but I can tell you, I have the financial advisor has done the most so far, manages about $860 million. I've known him probably 30 years, but he's always sent me a little business here and there when someone wanted gold or silver, but he's now recommending it, and I don't mind. As I told you earlier, we've seen a $400,000, a $300,000, a $250,000, and $1 million sale just on 4 of his clients just since June. So, see, if that starts in earnest, then it's going to start making supply here, just like you wrote about importing metals back this way, just like you wrote about in your last report. So we're excited to see the possibility of some of that gold and silver making U-turns and coming back to the U.S.
So what you're saying about the financial advisors now, it's not the financial advisors that they are waking up, but it's their clients that are suggesting to them that they want to get the physical metal, correct?
Both.
I see.
Some of the advisors very slowly are recommending, and others are doing the research because their clients told them they're going to buy metals, so they want to be sure they buy it from the best possible deal they can get.
Tom, if I could, do you actually have financial advisors purchasing metal for their own accounts individually?
Yeah, but not in big amounts. I mean, I don't know what the one that managed $800 million. I mean, he's been buying gold and silver from me for his personal account for years. I don't know what percentage it is of his assets, but he's been buying it. But yeah, and we've had more financial advisors this year buy gold and silver for their own accounts than we've had. And I mean, and most of them have done it more for a protective barter type situation, buying some silver to have a position if they needed it to trade, and then also buying some gold, but not in the big dollar amounts that they're recommending. But yes, we've had quite a few financial advisors buying, a lot of them buying silver for protection, just for a rainy day or bank closings for a few days or anything that might happen out there.
Okay, before I start getting into some of the emailed questions, and I would like to tell everybody, the attendees, please type in any questions. We've got a few questions from some attendees. If you want to ask a question or present a question, go ahead and type it in now, and we'll get to those towards the latter part of the webinar. But before I get to some of the emailed questions, Vic, do you have any questions you wanted to ask Tom?
Well, key was the market front running, just this demand that I think I'm hearing about. Tom, one of the things I wrestle with is just the whole storage issue. I know when I talk to clients, you get into a discussion about folks, even though the trust factor is there, they're just uncomfortable storing the metal in their own possession for security reasons or what have you. And then, of course, we get into the storage discussion, which can get complicated. And one of the things I see out there, Tom, I hear a lot of information being broadcast about different types of storage. You should store in this country or that country. The fees sound like they can be large enough to become a real consideration and whether or not folks should do that. And just one of the things I was hoping you could drill down on a little bit, and Steve and I are certainly aware about this because we've had discussions with you about it, but the storage fees, the storage.
Yeah, I've shared with y'all, both of you before. I have flown to other, I'll just call them other destinations at the expense of the depository, and they're not even 20 minutes into their presentation till they say, now we'll charge your client 100 basis points and you'll get 40 basis points ongoing. So bring us, $10 million over here and you're going to make $40,000 a year just by having your clients store here. Now, this gets into an ethical issue for me. I'm not talking about anybody else. I'm talking about me. But I could never do that. I could never make one penny off of storage. I want the client to get the best deal possible. I want to know that I did a good job here on earth of helping people make a profit and make it as quickly as possible. But unfortunately, a lot of the dealers out there look at this as they can justify it in their own mind that they deserve to get money off of storage at the expense of the client that they've already made a commission on the sale, and they're going to make commission probably when they resell it, and then they want to store part of the storage fee. So that's just something that does not appeal to me. And when I approached the COMEX warehouse that we use, one of only 9 in the world, I said, the only way I want to do this, I'll bring you tens of millions of dollars of money to be stored through our cloud hard asset storage program, but I want the absolute lowest possible price. And they came back and gave me this 20 basis points if it's all of it's segregated, but it's stored in a room with my material, but it's sealed, and I don't go to Delaware or Canada to IDS to go inside because I can't. I'm not even allowed to go back. But when I'm at those depositories, I'm not allowed to go back for insurance purposes where everything is. But anyway, so we have the 20 basis points, and if they want it segregated and have it in their own box within the depository, then it's 30 basis points a year. And I've worked this out, and it's already been the most successful program, and we're just a few months into it, and yet it's allowed us to make some very large sales. And more importantly, we've had people that want to hear about it. They call and say, is there any way I can send my metals to there? And we say, yes. If you buy $10,000 or more from us, gold or silver, and have an account number, then you can ship your gold and silver there. And IDS has agreed in my contractual agreement that they'll treat your stuff just like you bought it from me. So the key thing is getting the account open and then move it over there and save a fortune. We've probably had, I'm going to say 15 in the last month that have come over in storage fees running from 45 basis points to 1.15. I keep them here as we get them. I write them down, what they're leaving to come to our 20. The cheapest one anybody had was 45 basis points. And now they've cut their storage rate in half by just buying $10,000 worth of gold and silver from us at low commission. So that's kind of it, Vic, as we're seeing. And that's going to become more important, the storage, because as wealthier people move into it, they just don't, like you said, they don't want to keep their gold and silver. And they may keep a little bit for emergency, but they don't want to keep tens of thousands or hundreds of thousands of dollars in their possession and run that risk. And that's the reason this program not only has been successful, but only gets more successful every month.
Thanks, Tom.
If I could, it just reminds me quickly of a story about money market funds when we actually used to pay real interest rates, but Pershing, which was the firm clearing for the firm I was working for, would sit down with the firm once a year and say, here's the gross money market rate we're willing to pay, and then there'd be a negotiation how much the firm was going to keep and how much the client was going to get. And typically the firm would end up getting about half of what of the gross number that Pershing was willing to pay. So it just looks to me like storage is almost an extension of that. There's a gross fee. A lot of people are in there taking a piece of the gross fee, and the client ends up with a net.
No, I appreciate you adding that. That's true. It sounds like this is how people make money off of people, isn't it, Tom?
It really is. It is. Like I said, I'm not saying anything bad anybody does. It's just not me. I just can't do it.
Okay, I'm going to just jump to one. Someone wrote this question. His name is Tony. What is the silver storage fee? I guess what it is how much silver that is being stored, the amount, correct? Let's say it's a...
Yeah, what you're doing there, you're paying, whether it's gold or silver in our program, is 20 basis points, period. And if it's compared to even the ETFs, we look at GLD or SLV at 50 basis points and Sprott's ETF in Canada at 45 basis points, and you don't even have real gold, silver. You have a piece of paper and partial silver cover it, and then you're still paying 50 basis points or 45 basis points on top of your financial advisor making 1.5% a year. So I mean, this thing is unbelievable. What we've done is not anymore. The gold and silver are at the same rate. They're at the same rate, whether it's gold or silver. And the way it works is if you come in under my account, segregate it's yours and you control it for storage purposes. It's in with all my clients and my own stuff. Then you're going to pay. You get 6 months free rent. Now, not if you transfer it, but if you purchase, 6 months free rent, and then you pay 10 basis points for the next 6 months. At the end of the next 6 months, and IDS stores using June 30th and December 31st. If you come in the middle of that, then they prorate it. But anyway, that's the way. So you're paying 20 basis points a year for silver, and of course that's what's been our biggest driver of business in this program has been the unbelievable amount of silver that's been transferred from other depositories where they were paying 3 to 5 times more and moving it. And they did have an expense to move it one time, but they'll get that back real quick.
Well, thanks, Tom, for explaining that. And I think the attendee just wanted to know, 20 basis points for everybody else. That's 0.2%. That's 0.2%. That's what you pay a year to store, and it's what and
$200 for $100,000. That's all it is, rather than the prices we see out there normally $800 to $1,000 for $100,000.
That's correct. Okay, well, let's get to some of these questions. This was an interesting question, Tom. I think you could give us a good idea because you were a financial advisor before. Martin asked, why does everybody recommend owning only 5 to 10% in assets and precious metals? And this is not just financial advisors or planners. This is also gold. Let's say gold analysts. They recommend, you get 5 or 10%. So where does that number come from, and how come they don't recommend more, Tom?
Well, the reason they don't recommend more is the greed factor we've already talked about. Once somebody buys it, they buy a physical metal, then there's nothing they can do, because certainly, as you said, with some of the advisors I've worked with for years, is you sit there and realize over the last 16 years, since 2000 to now, the stock market's gone from 13.8 to 15 something. It's gone up like 60% total in 16 years, and gold's gone from 256 to 1350, 575%. So it only makes sense that you would have as much in the gold and silver as you would the stocks and bonds. But those companies, these financial advisors work for, the big names that we all know, they're not going to allow it. They're not going. And there's a provision in the securities law that some of your listeners may or may not know about. It's called selling away. And if a broker that had a license with a brokerage firm started buying from me and getting paid, then he would be selling away from his provision to lose his securities license. So these guys are trying to keep all the money they can under management to make a fee off of, and yet I still have some of the old guys that I grew up in the industry with. They're in their 60s and 70s now, that are 50-50 in their portfolio, or 60-40, 65-35 with in metals. So but that's the main reason, is just the offices that these advisors work in are just totally anti-gold.
They don't make any money on gold.
That's right.
I see. So that's the reason why they'll take 5%, 10%, but because if it goes above that percentage, then they're losing money from their commissions advising stocks and bonds.
No question about it. Not even one question about it. And they'll tell you that if you ask.
Wow. Now this was an interesting question. What percentage of precious metal investment do you advise, and what ratio of gold and silver do you recommend a person have in their portfolio? Or how much?
I'm from the old school, and I certainly I have a bigger percentage in metals than I would normally recommend to anyone else. And then it comes down to the question: are you trying to do it as an investment, or is it money you've already made that you're trying to preserve? And while there are more and more 30-somethings and 40-something-year-old people coming in our market, we're still dealing primarily with people that have accumulated wealth and are wanting to move it. And I still like 2/3 gold, 1/3 silver, just because gold is money, and eventually we will have a gold standard somewhere in the world, and gold will get its big jump in the end, while silver is still an industrial metal. And while it has more leverage right now than gold, we think we'd all agree on that. I look at it more as a little more speculation, because it's much more volatile, because it is a industrial metal / investment metal, where gold is an investment metal, substitute for money, maintain purchasing power. So ordinarily, I'm still going to stick around 2/3 gold, but certainly that's up to the client. If they want to go 50-50 or 100% silver, they can do it. But I'd say the older money is about 2/3 gold.
Okay, and this is a good segue. One of the questions I received is if someone has 50% of their 401k, let's say, money in a physical silver storage, do you think that is too high a percentage? And what you said is that that's not too high if that's what they choose, correct?
it's not too obvious what they choose, but I would have to know what the 401k storage is probably going to be, GLD or SLB. 99% of all the 401ks in America were set up by brokerage firms or insurance companies, and they left gold out as a provision. I haven't done this since the 401ks hit back in the 80s. I can tell you the easiest way if anybody wants to invest in gold and silver out of their 401k is to take a loan and then he's paying interest back to himself. He buys the metals individually, has the metals, and then at some point he sells some and pays himself back plus a little interest into the 401k. But I don't, unless that question, if a guy's got 50% of his 401k in gold or silver, I'm assuming it's an ETF, which is really not gold and silver. But if it is gold and silver, I'd certainly like to talk to him. He probably has one of that 1% of the 401ks that would allow physical gold and silver within the 401k.
So
we do have some of those. We do have some of those that set up that did allow that provision, but they were usually smaller companies with under 15 or 20 employees.
I see. And basically the rule of thumb is what you're saying. Older people, let's say a little older, who have accumulated wealth, you're more for protecting wealth. But let's say you're younger, if a person was at least, let's say, half in silver, that it's a different investment strategy, correct?
Yeah, they've got more time to work, and they can have a thing like we saw when silver fell. There in 08, we saw it fall 28% when gold was going up, and then you see it turn around and go down to $9 in the fall of 08, and then in the fall of 11, it's sitting at $47. It goes up 500% in 36 months. So, a younger guy, can take those things because he's going to see several of those in his lifetime. Where a guy my age in his 60s, he's not going to go out there and speculate with. He may speculate with some of it, but he's not going to go out and buy mostly silver. He's going to buy mostly gold and some silver.
Okay. All right. This next question is another Martin, and he says, people talk a lot about the price of gold and silver when the time comes that physical metal and paper IOUs separate. My guess is no one will sell their gold or silver for currency because the currency will be worthless. The financial system will be in the doldrums, the window of exchange to currency and immediately to other hard assets like a farm or a down payment for a farm will have a very short lifetime. So the timing is essential. What is your opinion, Tom, on the time span between, let's say, the death of paper IOUs and the possibility of using physical gold and silver to manage the transition for your family? Kind of what you talked about with Venezuela today. How much?
Yeah, go on.
No. What do you think about that question?
Well, I think the window of exchange will have a window. I think you'll see, because the governments will inflate at the end for their benefit to pay things off with cheaper dollars. So the key thing that all of us, the ones listening, and me as a dealer can do is to help, try to help people know when that blowout's going to end, and we go to a gold standard or something. But it's not. There will be a window in there where when you need something, you'll sell an ounce or two of gold that's worth $2,000, $3,000, $4,000 an ounce, and you pay for what you need, but you just keep holding your core position. And at some point, like I said, because the world financial system is so intertwined today compared to the past, once you see hyperinflation there, or you see a major money center bank bail in the United States or Germany or somewhere like that, then that window is open, and you just start following it every day and don't get caught up in the price moves and try to do it, because your homework is to know when to exit, exit and for the biggest benefit, whether you're doing it to buy a farm or whether you're, doing it, for pure profit to have more. But the government's not going to just close that window right away. That would be of no benefit to anybody. But if they all hyperinflate, then certainly they'll pay all their government debt off a lot cheaper dollars, and then there'll be some kind of reset eventually.
Okay, now that actually sounds pretty logical. I get this question the most, and this seems to be the fear about the precious metal, investing in precious metals. So I'm going to make this one general question. Are you or your clients concerned about confiscation of gold or silver? If so, what do you have to say about the possible precious metal confiscation?
Well, there's a lot of bullet points I can make. I can tell you there are many clients, not just mine, but all bullion dealers in America that have clients with airplanes that could fly anywhere. We now got another major depository opening in the Cayman Islands. We've got a great depository over we can work with you on in New Zealand, and they don't have the low storage fees that we have with IDS in Canada and Delaware. But it's just, to me, the confiscation, I don't see it. I would never say anything's impossible, but a lot of the people that talk about confiscation are people selling rare coins, trying to make a big hit by scaring people, telling them the rare coins aren't going to be confiscated, but their gold bullion coins are. And certainly I disagree with that completely. But I think if it ever came to that there'd be so much gold and silver flying out of here in planes. But here's the most important, and this was told to me by a guy that's very very well known, and he said basically we'd be a third world country. But there's no way any leadership would let Japan and China that are telling their clients to buy metals, and then we came along and told our clients our citizens we're going to take your gold or silver away. I mean, we're locked out then. I mean, we've gone down to nothing. And if you think about it logically, it's not going to happen. But certainly I've learned to never say never, but it's highly unlikely, and even if it did, you'd have many chances to take it, and certainly you could melt it. You could melt the gold yourself and have it in a big blob if you wanted to, and get it reassayed later. So there's all kinds of things you can do, but it's something I don't worry anything about.
And I guess the one comment I always come to, the one thing I think about is if they are going to confiscate it, worst case scenario, I don't think they're just going to take it from the person or the individual. They're going to give you something for it. They did in 1933. So people, when they think about confiscation, they may lose gains, but they won't lose their investment. That's how I see it.
Good point. Excellent point.
Steve, if I could, if there was a day where the markets decided not to open, one might say that's a bit of a confiscation of your 401k or your IRA. But
right.
A couple ounces buried in the backyard are really nobody's business. So I'd much rather have that problem to worry about.
That's an excellent point. Yeah, that's an excellent point. Now, Jeff, this is actually in the same vein of the confiscation. Jeff says, is there even a way other than storing outside the country, which is like jumping from the frying pan into the fire? He goes, to secure your physical gold against government seizure. Do you have anything to add to that, Tom?
No, I mean, I think you look at it as part of your portfolios. Somebody's got a bigger portfolio. You just got to realize the cost, because sometimes they want a sponsor to come in, and that's the reason I've worked so hard, even with the vault in New Zealand, to get the lowest, even though it's over two times what I can store it for. We at least got another outlet that's highly respected, and we're still working on the Cayman Islands situation, trying to get a better deal for our clients if they want to send it there. But no, you just have to go wade through all that, and it's an individual thing that people are going to come up with. I mean, what I love about storing in Canada is that if you store 999 silver or better, or 49 gold, you can have it sent into the United States for no tax. I mean, it's no different than having it sent to you from Delaware. Now, if you had Krugerrands or Gold American Eagles, you couldn't do that. There'd be a tax to take your metals out of Canada. But if you got 4.9 gold, which is the Canadian maple leaf, or the 1 ounce Royal Canadian Mint gold bars, then you certainly have a product that you can get. So you could drive to Toronto and pick up your own gold and silver, or gold and silver, if you want it, as long as you buy the right kind up front, that's 3 nines in silver or better and 4 nines in gold.
Well, thanks for sharing that. And I guess anybody who has any questions about that or the products, they definitely can call you up, and we'll give that number at the end of the webinar. I do have a question here from Buddy. He says, you say you think something should happen in China within the next 45 days. Do you think it will be positive for gold?
Well, that's what I said earlier. If I had to guess, I'm calling it neutral for right now. I'm not trying to call it neutral because I'm trying to get off the hot seat. There's too many people I know in this business, and two of the ones I respect the most are on different ends of the spectrum. One of them thinks that it will be more than what the United States has, that will then cause a problem. Does the United States really have all that they say they have, which we haven't had an audit at Fort Knox, and I think it's 56 years or since 1956, one of those two. So there's that school of thought that is going to be higher. Because remember, in 2009, last time they gave their reserves is like 1,700 tons. So in 7 years, just through the legal import that mainland China has taken from Hong Kong, we've seen about another 1,750 tons. So there you're about 3,500, and we're seeing people that say it's going to be a lot more than 8163, and others are saying, no, China's not ready yet, and they probably will not even give their real numbers. They'll give the International Monetary Fund big enough numbers to get approved for their special drawing rights, but they're still in an accumulation mode, and they don't want the price to go up that quickly yet until they and Russia and potentially India get all that they want. So I know I'm just telling you both sides of the coin, but my guess is it's probably going to be somewhere higher than the 3,500 and less than the 13,000 I've seen out there. It wouldn't surprise me to see it just under the U.S., like 6,500 tons or something like that. And that would be positive for gold.
Okay, here we have this by Walter. He wanted to know, how much should one follow or even worry about the COMEX today, in the future, with the Chinese and now Japanese trading the physical? Do you think these two countries have any influence in the COMEX, or do they even care?
Well, I don't think they care from the standpoint of that. They're not the one. It's always going to be the brokerage firms and the world money people that are interested in the COMEX and interested in keeping enough for delivery where the world doesn't panic, like we saw back in January 26 when we got up, and I don't remember the exact number, something like 90% of gold for delivery was gone. So you always run that risk, but the Chinese and the Indians, the Chinese, and now the Japanese to some extent are, I mean, their people are buying it, and while the people that play in the paper game are the same participants. I mean, it's the same old good old boys doing that. I'm not saying that China doesn't do it at all, but I know they wouldn't do it to the extent that J.P. Morgan or Goldman Sachs or HSBC or any of these others that do it all the time, trying to go one way or the other to multiply their profits. Like I said earlier, just think what J.P. Morgan is going to do when everybody goes long in silver, and that's where we get some of these numbers we've all seen out there. If they've gone out and bought millions and millions and millions of ounces, and they're ready now for the price to take off in the paper world. They just go on the long side, and they watch their silver physical go up 5, 6, 7, 8 times. And I think there's a good chance that's going to happen.
That's interesting because there's a question here by Wayne. He says, with J.P. Morgan holding such a massive physical silver inventory, does that not give them control over the price in the long into the future, even in a market where the paper silver is no longer the driving price?
Well, they're always going to be recognized. Walter's right on. They're going to be recognized as somebody is like the gorilla in the office or the line in the back mirror. You got to keep a watch on them. There's no question. But as this market, just like the physical market that started back in April in Beijing, and now the Tanaka Holdings over in Japan. I mean, these people in the world now are having access, to gold, and Americans are getting a little more astute about it. Still got a long way to go, but no, I don't see them controlling it. And you got to remember, with all these solar panels that China is talking about, I mean, they could wipe all the silver out anytime they wanted. And once again, they don't want silver to go up too fast. I can see them getting into the gold standard long before they would do anything in silver. They need the silver for solar panel production. If they're going to make China independent, they need this silver for that item. So, no, it really doesn't worry me because they're losing more control every time a major purchase is made and people move in, and it's diluting their power. It doesn't mean they don't have any, and as I said, you got to keep an eye on them, but I don't think it'll be a major driver going forward as it is now.
Okay, and he had one more thing he wanted to say. One more question. Also, is it even realistic to see the physical silver price breaking free of the paper market? And basically, he says, let's face it, there's been so many hopeful signs that never come true to fruition. And of course, that's we did have the move up in 2011 up to almost $50, but we've been heading lower up until this last half a year. It's been in the 13, 14, 15 range going down that far. So do you see the physical price of silver breaking from the paper price in the future?
I do. I think that's inevitable, and of course, many of your listeners have read geological studies. You and I have talked about this, where 2 years ago there's report out that the first metal to be depleted from the Earth's crust was going to be silver by the year 2020. And then you and I were talking about it one day, and you had found a report that said they found enough now to go to 2025. But even 2025, we're talking about 9 years away. They're potentially being all the silver in the ground wiped out completely, or close to it. So that's something you got to remember. This is not a metal that there's a lot of it left out there. It's really a rare metal. So it would not surprise me a bit to see the separation, just like you've seen in Venezuela, in a very, very isolated case. But think you can go down there, and first thing I thought is I'm not going to do it today or tomorrow, but call the missionary back and said, when you go down there, I want you to take 100 1-ounce silver coins, my donation, and give them out to people. They can feed their families for several months. And that's an extreme of what might happen with us, but certainly somebody calls and they need silver for barter, and silver's at $50, and you say, well, I'm kind of like the wholesaler that doesn't want to get rid of my inventory. I'll sell it to you for $75 US dollars right now, but I really don't want to sell it, but I would sell it for $75 or $80. So I do see that separation coming. I really do.
Okay, and I think we only have one more question here. We've answered a lot of these. These were answered over and over, but if someone calls and asks about contemplating buying silver eagles, silver bars, or silver rounds, can you, and that's the same thing with gold, but can you kind of give an idea, a basic idea? what the recommendation or what the advantage of having, let's say, a maple or an eagle over a bar or maybe a round?
Well, you have what you call a sovereign coin. That's made by the Austrian government, the Philharmonic, or the silver eagle, or the silver maple leaf, or the silver kangaroo from down in Australia, or the English coin also. So those you have, and what I like doing those is look at what I look at my spreadsheet that I can buy from a wholesaler or sell to a wholesaler, and just like I said earlier, depending on if a guy wants more or less, you'll see some nice spreads. So when people want a sovereign coin, one of those big I've just named that is made by a country, then I'll usually recommend the one that has the best spread, and that's been the Canadian for about 2 or 3 months. It's the best deal when you look at what you pay for it and what you can get for it the next day. It's been the leader on the sovereign side. But then you got to decide whether that is worth $1, because you can buy the silver round that the buffalo that's made by Highland Mint that we use can be put into pension plans and do IRAs. It's the only non-sovereign coin so you look at that and you buy it $1 cheaper. So then the key becomes, what can you sell it for on the other side? And sometimes it's the best deal, and you're buying it trying to accumulate ounces. So it's not just a straightforward answer. You've got to look at where you are, and yet we have many clients that buy nothing but silver eagles or nothing but silver maple leaves. They don't care if the spread's a dime better or 15 cents better today. They'd still rather have what they want. So that's always going to be a personal decision.
Okay, and Bud just brought up a good question. And what about like for reporting, tax reporting? Aren't there certain products like the maple or silver eagle that you don't have to report? Or could you explain that briefly?
What you have is you have the form. Remember, when you buy, there's no reporting whatsoever. You can buy $10,000, $100,000, and there is absolutely zero reporting by a dealer. Now, when you go to sell, there's a 1099B for certain items. So here we go. Gold bars that are over .995, you do not have to report up to 32.15 ounces per year per person. So if a guy came in, sold a kilo bar, I don't have to report. No, I'm sorry. I do have to report if it totals up to 32.15 ounces. If it's under that, it doesn't mean you don't owe taxes or can take a loss or a gain. It means that we do not have to 1099B you, a 1099B form to you. So you can do 24 ounces of pure gold bars per year per person. Silver kicks in to 1,000 troy ounces of .999 silver, and that is on bars and not on the silver eagles. And platinum's .395, 9995, palladium's 9995. You got to sell 100 ounces of palladium before there's a 1099, 25 ounces of platinum before there's a 1099, and on the 25th ounce of any pure gold product, you've got to do a 1099. Now, let me say this. If you're a client of mine and you sell 15 in June and you sell 15 in December, I'm still obligated to fill out a 1099. And if you sold me 15 and you sold somebody else 15, the liability is on you if you don't tell the government that you sold over 24 ounces and got a 1099. So this is very important, and it is, and we're happy to go over that with you when you buy it. And certainly if you're a married couple, you can do 48 ounces of pure gold a year and 999 ounces of silver times 2 without having to get a 1099B.
Okay, and I guess This is it for the questions. And before we'll have you put some information on how they can contact you, does anybody have anything, Vic or Tom, do you have anything you want to add before we conclude the webinar? Any closing thoughts?
Well, I mean, I've enjoyed the webinar. I really enjoyed the questions because I really do want to educate people, and I just like for them to, you'll flop our 800 number up there, but Dan Scoggins has been with me 21 years, and Kathleen, my assistant's been with me 5 years since I moved down here, and Carol's been with me 5 years since I moved down here, and Mary Morton, my accountant's been with me 32 of my 40 years, and she's the only one that's not in St. Simon. She's in Atlanta. But we just like to answer questions and talk to people, and like I said, you're not talking to anybody on the phone that makes commission for selling you anything. We're trying to educate you because I believe with all my heart that we're going to see some incredible rough times the next 3 or 4 years, and I think it might start sooner than later. So just let people know we're available, and if they don't have our cloud hard assets storage electronic brochure, they can call the office, and Kathleen or Dan will email them the IDS electronic brochure as well as that. And my last statement is I'd urge all of you that are not on my blast list, I'll never share an email with anybody. So if you're signed up on our email blast, you can sign up at SRSrocco, and when we send out the information, you'll get it at no obligation to ever buy anything. So that's kind of it, and really just don't hesitate to pick the phone up anytime you have a question. We'll be happy to try to answer it.
And what is that phone number, Tom?
800-247-2812. 800-247-2812. Or then go on our website at cloud, C-L-O-U-D, hardassets.com, and peruse around and look at pictures of products and a couple of articles I've written under the precious metals section. So gives them some more education.
Well, thank you very much, Tom. And Vic, anything else you wanted to add before we conclude?
Sure. Well, I'd like to thank you both very much. I think this has been absolutely terrific. The thing that really attracted me to Tom and Steve initially was just their level of knowledge and lack of hype. Discussions have always been very clear and very willing to answer questions. One of the things that I always find fascinating about information that Steve shares with me is the number of new visitors that he gets to his site, and I think sometimes those of us that have been wrapped up in these metal markets for a while forget that every day there are new people coming into the market that maybe don't have the full range of knowledge that we've come to try and gain over a number of years. So I want to keep working with Steve and Tom just to educate people, new timers that are really here to learn and get honest information. So I thank you both very much. I think it's been very useful.
Okay, Tom and Vic, and I appreciate all attendees for showing up and the excellent questions. And we may be doing more of these in the future, so I do appreciate everyone showing up. And we're going to conclude the webinar now. Thank you very much.